Okay, so Kaylin, you can start now, and I'll edit it out before I actually upload it and send you guys the link too. So.
Okay,
Okay.
perfect. Welcome everybody. My name is Kaylin Plum Neal, and I'm the founder of KP Financial Solutions. I'm in my 14th year of business, specializing in income tax, bookkeeping, and 8 years ago I got my MFDA and FSCO license to do insurance and investment products as well. Right now with all the pandemic and issues going on, there's lots of questions on do you qualify for any of the programs as business owners, as individuals? So I've brought a specialist that's been doing a lot of due diligence and hard work with all of this information, and I think she'll be a great asset to help you determine exactly what you are eligible for and how you can help to keep your business up and running during these hard times. So I'd like to introduce Tanya Hiltz. She's the founder of Cloud Bookkeeping Services, and she's going to be a great asset here.
Great, thanks so much, Kaylin. So here's myself, just a little bit about myself, and there's a lot here, so I won't quite go through all of it. But yes, I'm Tanya Hiltz, founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. So I work with bookkeepers as well as small businesses. I have been the IPBC, which is the Institute of Professional Bookkeepers of Canada, because those of you who are on the call or watching the call are probably not bookkeepers. So I was voted their 2019 Professional Leader of the Year. Our Bookkeepers Bootcamp also qualified through our organization for continuing education credits, which, you know, in our industry to have a program qualify for continuing education credits is, you know, quite the big deal. I was also founded the Intuit Global Accounting Firm of the Future for 2018 and rating because they stopped the contest right after that. And we were the Canadian runner-up for 2017. I've also been found and recognized as one of Practice Ignition's top 50 women in accounting worldwide for 2018 and 2019. 2018 Inspire Bookkeeper Award winner, a top 21 influencer in the Canadian bookkeeping world. You know, Insightful Accountant had me as one of their top 100 pro advisors for 2018, 2019, and 2020's list will be out sometime in the next month. You know, I'm also a current board member of the Institute of Professional Bookkeepers of Canada, a HubDoc top 50 cloud accounting firm 2018 and 2019. So you can see we're definitely involved in the online world, and that's great. And, you know, a lot of bookkeepers and these firms obviously see that, you know, we're giving back. Otherwise, we would not have received all these accolades. But I'm also a Futurepreneur Canada volunteer mentor. So I'm a real advocate for the small business, a member of the Intuit Trainer Writer Network to, again, help train and educate people, as well as, you know, certified in, you know, like QuickBooks Online, many apps it's used with it. I am a certified professional bookkeeper with over 20 years bookkeeping and income tax experience. So that is me in a nutshell. We're just going to stop doing the screen share right now. We'll just go to us, and I'll just keep watching for anybody joining. But yeah, so as Kaylin said, that I've immersed myself in this. I wanted to make sure to be proactive with my clients, and basically what started this is, like a lot of you, probably I was feeling a little bit of anxiety. I am high risk, and I also absorb a lot of energy around me. So I actually had a little bit of a breakdown in week 1, and I thought, this is not good. I woke up the next day and said, okay, what can I do? I had clients contacting me saying, well, what does this mean? I just saw Trudeau's announcement. I don't understand what it means. They were all coming at me again, along with all the information that had been coming out from the TV. So I turned the TV off. The only thing that I'm actually paying attention to are Doug Ford's announcements and Justin Trudeau's announcements, so that I can learn everything about the financial and how to be able to help the clients, how to be able to help the bookkeeping and accounting community. I'm lucky. I've got a really good team that I work with that is doing the day-to-day operations. So I have thrown myself into 75% of my day is strictly doing this. I'm on government meetings. I'm on government lobbying calls to try to lobby for the small business, dealing with, you know, other accountants, as well as the government to try to decipher the rules. So if there's anybody who is an expert out there on this right now, I absolutely would be within the top 5%. And then, of course, I believe in sharing that information out. I believe that, you know, the accounting professionals can help their clients, because a lot of the accounting professionals don't have the team that I have, maybe work for themselves, just like a lot of you work for yourselves, and you don't have a team to be able to do your work while you find out what you're eligible for. So that's exactly why I've thrown myself into all of this. So we'll just kind of start to go through. And again, I just kind of didn't have anything formal ready for this. I just thought it would kind of be an open FAQ. So I'll just go through and organically kind of go through exactly what it is, the general language, the layman terms of what it is that you that you might qualify for, what circumstances qualify. And then if there's anything that I've missed or any questions as we go through, Kaylin or Mara, please feel free to jump in to, if there's something that I've missed that you think that your clients might think about, and then we'll open up to a general FAQ right after that. So we'll start with personally. So there's the CERB, which is the Canadian Emergency Response Benefit. That is $2,000 a month. And some people have applied under EI, some applied under CERB, some are from EI are in the process of being moved over. So with that, depending on where you were when you applied, what was open, you may have a slightly different reporting process than somebody who applied a little bit later. But at the end of the day, it's a flat $2,000. It is not it is taxable currently, but they are not deducting taxes. So it's very important to realize at the end of the year, when your tax time comes next year, that unless they change the legislation, which I do know there are lobbyists who are trying to fight to have the legislation change, but as of right now, it absolutely is taxable. That will not be worked out until tax time. So make sure to put, 25% of it aside, or at least think at the end, if you've got $8,000 and you're in a 25% tax bracket, try to kind of save this up, or know that you could potentially owe that next tax season. So there's that. It is eligible for anybody who earned more than $5,000 of income in 2019, or if it wasn't all in 2019, in the last 12 months. So we can look at one or the other. The qualifications for that: you must have stopped working due to COVID. You must not have voluntarily quit your job. And so anybody that quit their job before COVID, let's say, for example, in February, does not qualify. If you, quit, so my daughter, as an example, she quit the first week of COVID, wasn't necessarily voluntary. It was because I was high risk. So because I was high risk, she quit to stay home as to help keep the household risk lower. She would then qualify for that. She's a college student, so she qualifies under that. Any college students who worked only in the summer, any high school students who work only in the summer, they do not qualify for CERB if they were not working up to and stopped working due to coronavirus. It's been opened up. When it first came out, basically those were the rules. It's now changed. You are now allowed to earn up to $1,000 under $1,000 per month. So $999 per month in order to keep your $2,000. If you are working as an employee, then that will be your gross. If you are self-employed, they just updated the website this week to say that can be your net profit as a self-employed sole proprietor. So you've got a little bit more flexibility there because they realize that as a sole proprietor, you will have more expenses than just somebody who is an employee would. So you've got that. They have now opened that up to college students, and college students are eligible for, as long as they are entering college, in the middle of college, or they've just graduated college or university, of course, then they qualify for $1,700 a month starting in May, because they wouldn't have been open until May yet. Excuse me. That portal for the applications is not open. We expect that to be open by mid-May, and it'll be backdated to the 1st of May. It will go from May to August, which is 4 months, which is the same as the CERB. Currently, the CERB is still 4 months as well. So regardless of when you apply, so somebody that lost their job in the beginning might think, well, great, I don't get as much as somebody who lost their job in May. That's not true. The CERB right now is open until October the 3rd will be the last date. So it's 4 months or 16 weeks, anytime between March the 15th and ending October the 3rd. So we've got that. Dividends, if you have a corporation and you did not pay yourself regularly and you pulled dividends out, dividends is covered as well, as long as there is a dividend, a T5 issued for your dividends for 2019 for $5,000, that qualifies you as well. I do believe that's it for the CERB. Was there anything that you think I've missed or any other questions before I move on, like Kayla and Mara or even Michelle, before I move on to the CEWs or anything else? Do you think I covered it for the CERB?
Yeah, I think you did a great job with that, yes.
Okay, great, thank you. Michelle, sorry, you're muted. If you want to go, feel free to unmute yourself. You may as well join in the conversation, so.
Okay, I was just saying that I do have a question regarding the CERB funding, but I can keep my questions to the end. I mean, you may cover it in the next.
Well, we're talking, I think that was it for the CERB before I move on to the next topic. So just ask your questions. You may as well just stick topic to topic. If that's okay with you, Mara, then? Perfect. Okay, yeah,
Okay.
Go ahead. So ask away then.
So my scenario is that I own a small business, bricks and mortar, 2 employees plus myself, and I closed on March 18th. But I also have another job where I work 20 hours a week, and I make more than $1,000. So I had contacted the government on an emergency line and asked them if there was any, financial assistance for me. And they told me to apply for the CERB, but I'm not too sure if I'm comfortable with that, if I would be eligible or not.
Okay.
And that's because I lost one of my 2 incomes.
Right. And that's actually a really good question. So I'm really glad that you answered that. The important thing here is right now, the government's throwing things together. There is no audit process right now. They will be auditing afterwards. So anybody who applies for the CERB right now, everybody's going to get paid. They're going to look afterwards. So if it turned out you didn't qualify, most people would think, well, they gave me the money, I must qualify. No, you're going to get a bill next tax season saying, sorry, we paid you $8,000, we want it all back. Right. So that's a really, really good question. So, and you can apply, and again, they just opened this back up. I think it was 3 weeks ago that they announced you were allowed to make $1,000 or up to $1,000. So if you have lost one of your jobs, you are still earning over $1,000 or over, you still do not qualify, regardless of how much income you lost on the other side. The qualification needs to be $9.99 and under. So you could cut your hours. For example, I have a restaurant that I deal with up north, and what he did is it's a Boston pizza chain, and he actually laid off most of his employees and kept a couple and gave them all the hours. So what we had talked to him is with the CEWs coming in, which we'll get into that the next topic, is what I said to him, listen, now that they're allowed to earn $1,000, you're going to get 75% back on the payroll. Let's go ahead, take those 2 people, lower their hours so that they're earning $9.99 and under. They now qualify for the CERB. So they're making more money and working less and exposing themselves less. Bring more employees back so that way he still has the hours covered, but strategically keeping everybody below $9.99. He now looks like the hero employer. It's keeping everybody's exposure low. They're able to now qualify for the CERB while still being able to make some money to top up, and strategically having their hours and their pay is kept to a gross of $9.99 and below. So you can work out, speak to your employer and see if you could just cut your hours back, and that would qualify you for the CERB.
Okay, that won't happen. I don't believe so anyways, because my hours really just got cut as of April.
Okay.
From 28 hours. So now I'm working 20 hours. Because this individual that I was talking to said, I mean, she was typing something in, messaging someone, and that's when they came back and they said, you do sound like you would be eligible, and just to keep all of your notes and all of your paperwork, because you did lose one of 2 incomes because of COVID.
Yeah, it is. I have read the legislative bill inside and out. I know it by heart.
Okay.
There is nothing, the maximum you can make, regardless of how many incomes you lost or how much of a percentage income you lost. CERB is not based on percentages. CERB is not based on number of jobs lost. CERB is 100% based on less than $1,000 of earnings.
Okay.
Yeah, and there is no gray room or wiggle room at all, unfortunately, with that. I would say that would definitely be a conversation that I would open up with your employer and say to your employer, listen, again, if you use the same type of strategy that I discussed with my restaurant, bring more people on, have their hours less, and then that way everything, the business needs are being covered. And again, the employer is now being a hero to the employees, which is gaining employee loyalty by helping to work with the system and make, you know, your situation a better situation while still covering their business needs.
Yeah, that's not actually going to work for the company that I'm working for.
Okay.
Okay. I do have another question. Anybody who is on CPP and has a business, if they have that income coming in from CPP, but I'm talking about my husband, so he had a business, he had to shut it down, and would he be qualified even though he's getting CPP?
So the CPP has nothing to do with it. They don't look at
Okay.
CPP at all.
Okay.
So it is just, if he falls under the qualifications of everything else,
Yep.
he either received, you know, $5,000 of dividends, he was a T4 for 5,000, or he was a sole proprietor.
Yep.
He was, you know, still had the earnings of $5,000 or more in the last 12 months of 2019, and now his income is under $1,000. That is all they look at, is strictly the employment and the self-employment income. Any other incomes by CPP or any of that is not factored into this, has nothing to do with the eligibility or the amount.
Okay, perfect.
So that would be, as long as he meets everything else, yes, he would qualify.
Okay, perfect.
Yeah.
Perfect.
Okay, perfect.
I have a question for you, Tanya. That's been quite common. A lot of people are concerned because they keep hearing, oh, we're going to have to pay back, we're going to have to pay back. If you had to take the time off because you have a young child, is that circumstances enough, because there is no daycares or schools open at the moment, if you have to reduce your hours to accommodate with you and your spouse to be able to provide the care for your children and be at home with them, is that voluntarily asking to be laid off, or would that be directly looked at as part of the COVID-19?
So that would, yes. And that's a great question, because you're right. If you have to stay home to look after somebody who's ill, to look after children who, you know, who would otherwise be in school or daycare and cannot look after themselves, yes, that is an automatic. It is still taxable income, but that automatically does qualify for the CERB as well. So yes, thank you for reminding me of that. Yeah, absolutely. Okay. Okay. Perfect. So if you guys think of anything else, we'll definitely jump back to that if you need. So then we'll move on to the CEWS. So the CEWS is the Canadian Emergency Wage Subsidy. There's also the TEWS, which is the Temporary Emergency Wage Subsidy. So what those are is, if you do have employees, you're paying out payroll, or if you are an employee, this is still good to know as how it'll work on the other side of things for your employer. So what will happen is, the TEWS, the Temporary Emergency Wage Subsidy, is a 10%. So if you're paying out employees, it's 10% of the gross wages. Or if you're an employee, again, good to know how this will work on your employer's side, is 10% of their gross wages paid out on payroll gets to be withheld and not deducted with their monthly or quarterly source remittances. So when they normally pull together the CPP, the EI, and the income taxes that's been deducted off your paycheck, 10% of the gross payroll gets to be deducted from that. There's a few other things around it. You know, for example, if you've got a bunch of people that work part-time, the maximum you can take off is the maximum of the income tax deducted. So you can't kind of dip into the EI and the CPP. So if the 10% is more than the maximum taxes deducted off all the employees, then what has to happen is you can max it to the max income tax deducted, but that remaining amount can continue to carry forward. So even if after this is gone, and we're going to think positive, when this is all gone and payroll goes back to normal, this can carry forward until the end of the year. Some payroll providers, or most payroll providers that took the liabilities off automatically, if you're running a payroll, you'll know what I'm talking about, did not have it set up for the first pay run. So that is something that can be requested through Revenue Canada. They will be pulling a form together in a process sometime this fall as to how to collect the rest back. So if you're an employee, your employer is automatically feeling a 10% of your gross pay relief immediately, that they get to keep the cash right in their pockets. The CEWS, which is the Canadian Emergency Wage Subsidy, is 75% of your wages. And how that works is they get to collect back as long as you are not on the CERB and making over $1,000. Again, if you're under the $999, you can be collecting the CERB, and the employer can use the 75%. So that 75% of their gross wages is refundable back from the government, which applications for that opened this week. And there's already been some concern on that. I was on a government call yesterday. I was lucky enough to be invited to it. Unfortunately, I didn't get the confirmation until it was halfway done, but I jumped on there, and they're doing some tweaking. So if anybody out there is watching this and has not applied yet, I would wait another week before you guys apply, because they're still tweaking things in there. The money is backdated, so if you don't need it immediately, wait. It will be backdated. We have until September the 30th. To be able to apply for the subsidy. So if your books aren't up to date, you don't have to panic, there's time. So Michelle, I'm not too sure if you had employees on payroll or if you dealt with payroll in your company, but this is something that maybe we could take a look at for yourself if you were on payroll, if you were a corporation. So we can get in if you've got any questions to that. I'll just kind of run through some of the other important details around that, and then we can open that up for questions. So what's most important with the CEWS is that basically the calculations is we have to look at what your 2020 pre-COVID wages were. So for example, because they don't want people to be able to gain from the system and to be able to take advantage of the system. So what we do is we take your January 1st to March 15th wages, take an average weekly wage. So the employer is eligible to receive 75% of that, to a maximum of $847 a week. When the employer goes in and does the calculations, they then have to deduct the 10% that they've claimed, because that's kind of double dipping. So they deduct the 10% from the 75%. So at the end of the day, they end up with about they still end up with about 76%, because the way the calculations works a little bit in their favor as the employer. Now, what's interesting about this is that you can bring people back, you can backdate their pays. That gets really tricky, and this is definitely a conversation to have with your bookkeeper or your accountant, whoever is dealing with your day-to-day details. It's the person to definitely have this conversation with, because what happens on this is if you bring somebody back, we can backdate it. It makes the application process a little bit more tricky, but if you've got somebody who is looking into this and knows what they're doing, we know how to manage that. But what happens is, if the person was collecting CERB and you want to bring them back because, and rehire them, they have to pay back the CERB. When do they have to pay back the CERB? We don't know. We're expecting it'll be next year at income tax time. I liked Trudeau's wording when he actually talked about it the other day. You will likely have to pay back CERB. The Income Tax Act does say you will have to pay it back. But again, how it has to be paid back, when it has to be paid back, we have no idea. So that could be a conversation that you're having with the employee, that the employee maybe says, you know what, that's too much of a pain, I don't want to do that. Or again, maybe, what you paid the employee was less than the $2,000. So you don't want to automatically assume it's okay to bring people back, because it might not be in their best interest. And again, if you want to come out looking like a hero employer, you want to be able to work with the employee and say, okay, what's in the best interest for them? And again, maybe that's okay. We'll bring you back and we'll pay you partial hours for some time that you worked, or something like that. So it could look a little something like that. But again, this is why it's really important that you talk to the person that is dealing with the day-to-day payroll and your day-to-day details. Some people have an accountant that just deal with the year-end taxes. The accountant is not going to have access to those details to be able to look that up. So again, your payroll person, or if your payroll person is your bookkeeper, definitely have that conversation with your bookkeeper. If you're going to pay somebody to sit at home, because this has been another question that comes up, is, people are misunderstanding the intent. They think, well, I can't stay home and collect this because we're collecting wages and it buggers things up. The whole idea of this is to keep the employer connected to the employee so that you have a job. So again, strategy that I'm telling all of my clients, and again, anybody who's out here watching this, if you have employees or had employees, this is a great strategy to look at. If you're an employee, great strategy to talk to your employer about, because maybe they don't have, a bookkeeper that is working with them in the same capacity to help them realize what the best options are for them. So if you're brought back on, again, maybe, work, $9.99, make the $9.99 or less, you can do that. If you're just being paid to stay home to have that connection with the employer, then the employer will be refunded their EI and the CPP that the company would normally have to pay. So the employer is refunded up to 75% of your pre-crisis wages, up to $847. So what some of the employers are doing is they're paying people just 75% of their old wages to stay home, and they're receiving back 100% of everything that they're paying out to the government and to the employer through these wage subsidies. The government has asked, try to, if you can afford it, step up, pay that 25% difference or anything over that. Reality is a lot of companies don't know if they think, well, I can afford it now, but if this goes on longer, then we realize might not be able to afford it. So I'm just recommending to people, if you don't know, unless you've got this much money in the bank to carry you through the next year, that it's better for the the employee to know that you're contacted or connected with the employer longer, and you have a longer job security rather than being paid out 25% now and then find out in 4 months they can't afford to go on and they have to close the doors. So that's what I'm recommending to people is like, let's not look at that. Let's just look at paying the 75%. And again, this is a cash flow issue. So again, why you really need to be speaking to the bookkeeper, even if you have somebody else do the payroll, speak to both. And that's Kaylin talks about cash flow and financial, and so she can help with all of that stuff. What else am I leaving out? So again, if somebody is hired back on, we also need to be very careful and strategic as to when they're hired back on. Because again, if they're collecting CERB and you pay them out the CEWS and you pay them more than $9.99, they will have to repay the CERB. So again, that's a strategic conversation. What is better? What does the employee want to do? So a good employer will have those open discussions with the employee to figure out, again, what's the best scenario? What do they want to do? If it's better to put them on the CEWS, they might say, okay, great. I've already spent, this $4,000 that's coming from the government, but as soon as you pay me back, you're going to pay me more than $2,000 a month. I'll just take the $4,000 out of there. I've already spent it. So I'm going to put that into a savings account and hopefully not have to touch it. So that way, when the government comes calling, it's already there to be paid back. And then I would also suggest that you have your taxes up to be able to cover the CERB, the money from the CERB that you're going to have to pay or potentially pay at the end. If you did collect CERB for a little bit and you're being brought on effective now instead of retroactively, have $25 extra a paycheck taken off on taxes, or $10 extra or something, just to try to help cover that extra little bit on the income tax side. I think that's really it with the CEWS. The only thing that I'll say is, again, good strategy, which again, I kind of spoke with the CERB, is just that restaurant. Again, look at something. If you've got a lot of employees, how can you help the most employees and keep those employees connected to you? It also is a really good idea. I have a friend whose employer is refusing to use the CEWS because he says you've already got this, you've got the CERB. Well, the problem is if you've received an ROE and you're not working and you're not receiving a payroll from an employer for 13 weeks, that employer may have temporarily laid you off for this and may not have paid you at your termination pay or your severance pay. That is owed to you regardless. So you cannot, some employers think, oh, well, great, if this just continues on, I don't have to pay it. That is not true. They will have to pay it as soon as you hit 13 weeks of not working or not being connected. So again, my recommendation to the employers out there is connect them, get them back on payroll, show that you've got, that strong connection still. And then, you know what, if you're still closed 3 months from now, there's still the CERB, they can then fall back to the CERB. So that way the government's funding this, because if you're using the CERB now, our CEWS is only covered for 3 months. So the problem is if that 3 months is done and you've already used the CERB in that, now there's no money coming in. So again, balance it both out, get them back on payroll, get 100% back of what they're, what you're paying them, even to, again, to stay at home. And then again, if you have to find that you have to lay them off because the cash flow is not coming because this is going on longer, then they can fall back on the CERB. If somebody is working, you obviously have to pay them. If they're working 75% of the time or more that they used to, you obviously can't just pay them their 75% of the pay. You have to continue to pay them their full pay. If they're working 75% of the time or under, it's fine to top them up to give them the 75%, because that's what I would just do that as a salary, because you know that's what the government is going to reimburse for. Anybody over that, the employer will have to pay the difference, the 25% difference, plus the EI and the CPP, but pretty much everything else will be refunded. So it's not going to cost them a lot. So again, that's really going to help with their cash flow, help them to stay open, and again, help the employees. The other interesting thing that was put into the legislation, because it's not easy to call Parliament back, is right now it's only for the 3 months. It is written in the legislation that Trudeau can, at his own discretion, without calling Parliament back, extend the CEWS to go up to the end of September. So that's there. So, you know, we can all breathe a sigh of relief to know that, you know, there are extra measures. I know, you know, anybody from the States right now is hearing that they ran out of money. Anybody else too late. That's not going to happen with us. All of that is built in. Our government, we pay enough taxes. Our government's going to make sure we're covered. Side note, expect our taxes to all go up when this is over, because somebody's got to pay for it. But we know we'll be able to make it through because, you know, we've got this. Okay, so before we move on to, we still have the loan to cover and the new commercial rent. So before we move on to that, was there any questions, anything maybe that I didn't cover that you thought, Kaylin, like on the wage subsidies?
Yeah, I actually have a question. So you mentioned briefly about backdating payroll. So I know someone that's had some of his hours backdated just so he can qualify for CERB. What are the implications of that come next year for tax season?
Okay, so were his hours backdated now back to March 15th, or was it backdated prior to that just to get him to qualify for the CERB?
Just to get him to qualify.
Okay, so that could turn around and bite them in the butt, because what happens is T4s have already been filed.
Okay.
So then you have to do an amendment to the T4, and the government is going to be asking, why are you amending this? Especially amending it after COVID started. It is kind of coincidental that it's been amended to qualify him for the CERB. So what can happen with that, his employer can be fined and penalized. The person filing it, the accountant or bookkeeper filing it, they can get their hands smacked because they know what's wrong too. If it's an accountant especially, the accountants have a lot more liability with CRA than we as bookkeepers have. And then as well as he will have to pay it back and penalties. A lot of people think, well, with the craziness, you know, how is this going to be caught? All of these payrolls, like first off, everything is by the T4. So all of these payroll subsidies, we have to actually put on your T4 box. So what they're going to do is they're going to be comparing, and first, and I've been dealing with audits since 1997. So in my best educated guess, the first run will be who's got original T4s last year of $5,000 or more, and who had a T4 showing that they worked that could have been to the beginning of this year. Because again, when they see the T4, they just see numbers, right? So they have to say, okay, who had some other income this year? So if somebody had no income last year, or they had income last year and they had no income this year other than the CERB, they obviously weren't working up to the time the CERB cut into place. So that's going to be the first piece that I'm expecting to see. That, if they pull everything out into Excel, they can have a list in about 5 minutes or under. If anybody out there knows Excel, yeah, they can just pull a quick list like that. The next stage I expect is they'll be comparing the T4s on those that are receiving the CEWS to the T4s of the CERB to say, hey, well, if they've collected, you know, $8,000 on the CERB, but now they've got, you know, CEWS T4s on here, they were double dipping, they have to pay back. Yeah. You know, then they'll be looking at, again, amended T4s. I think we're going to be really busy with a lot of payroll audits and
Audits,
T4 audits this year. But I would be very, very concerned because, again, like if the timing was done and they say, oh yeah, oops, and it was done before COVID started and the lockdown and all these financial aids come out, it would not be looked at as harshly because they could see the date that it was amended.
Yeah. Okay.
So I would be very concerned as to that. He might only have to pay interest back on the money he got, but I would say it's a matter of when they come calling for it, not if.
Yeah. Yeah.
Yeah. So as long as he's prepared to pay it back and to pay it back with interest, you know, I mean, at the end of the day, they would not give him the biggest trouble. The biggest trouble will go to the employer and to the person who filed it. So as long as he's willing to look at that as, you know, a higher interest loan, that's, yeah. But I know if it were me, I would not do that. Somebody asked me the other day to do that. And I said, no. I said, if you want to do it yourself, you do it yourself. I'm not going anywhere near that.
Good to know. Another thing that I heard, I don't know anyone that actually got this, but the mistake that like a full amount was disbursed to a lot of people, like instantly. What do those people do in that case?
Okay, so yeah, so some were mistakes and some were not. It depends on the timing. So if you received 2 deposits, basically the first week of CERB, then that was a mistake one. So what will happen is one will be owed back again at some time, probably tax time is when they'll figure that out. If you received a deposit the first week of CERB for $2,000 and a second deposit for $2,000 the second week of CERB, that is not a mistake. So as long as they weren't to the same week, because what was happening is they got the first set of money out right away and they said, okay, period 2 is just opening, but we know you need the money right now. So now we're going to get it in there. So I think the biggest indication is, again, what weeks did they get the deposits and how much? Because, you know, that first deposit on EI on a lot of them was not equal $2,000. So if they got $2,000 and a non-$2,000 the same week, yeah, that's a good indication that it was a mistake. Or again, if it was 2 equal $2,000 deposits, you know, 1 week apart, when the first week is served, when the second week, then that would be fine because those ones are not the mistake. That's my understanding that's a separation difference.
Yeah. Okay. Right.
Okay, perfect. Oh, sorry, Michelle, you're muted again.
Anyways, okay.
Here we go. Okay.
So when we open and I bring my employees back, is there going to be any financial assistance? Like, do you know if for a period of time when we go back to work, or are we on our own at that time?
Unless you fall within the period of the CEWS, no, that's the only thing that's coming out. So you could hire them back on now, pay them 75% of their payroll to stay at home and get 100% refunded back. You just have to be able to fund it for the approximately 2 weeks until it comes back in. That's the only thing, because it's refunded to you. So you pay them, you know, and then apply depending on when you pay them, because right now we're filing for March, for example, March. So as long as your March sales were 15% or more of a decrease from March last year, or if you would hit some growth or a new company, we can compare a January, February average to March. That's the CEWS eligibility, and that automatically gives you eligibility for March and April. You can look to see if you qualify for April. Excuse me, this is where it gets a little confusing. But you can look to see if you qualify for April on its own. If you qualify for March, you automatically qualify for April. So the benefit of looking to see if you qualify for April means if you qualify for April at a 30% drop or more for April, you automatically qualify for May, regardless of what May looks like. So if things open up and you're not at a 30% drop for May, then because you qualified for April on its own, you automatically qualify for May. You can also look at a cash or accrual, which again, this is why you really want to work with your financial advisor, your bookkeeper, whoever's in your details and has access to your details to see what is better. Because once you pick which way you're filing, you have to stick with that. So a lot of my clients, I said, let's wait until we have April's numbers. Let's wait so that way we can look at 2 months. We can look at March, we can look at April, and we can figure out the best way and the most strategic way to do that. So a lot of my employers are hiring their employees back right now, because even if they're staying at home and your business isn't open, again, the government will 100% refund that once you can file for it. You just have to, again, front it. And then that way they can get off the CERB, and then they can have the extension of the CERB if this goes on longer than we thought. So that's where the benefit to that really comes from, is again, take advantage of both. Because if you do nothing now, they collect the CERB, and let's say we're still down in June, their CERB is probably run out because they've hit their 16 weeks. You have no more recourse on the 75% unless they extend it. And so now your employee is without pay at all, and you've got nothing. Whereas again, if you bring them back even to stay at home and pay them 75%, you're getting 100% refunded. And then they get to stay at home knowing they're not collecting the CERB, so that if this goes longer, they have the CERB to fall back to if the CEWS does not extend past May.
So if they are making a lot less than $2,000, then it's not really worth it.
No, and that's where you have to take a look at, look at their individual situations, absolutely. Because if they were making less than that, you're right, it's not worth it to bring them back. If they were making more than that, then definitely that would be a conversation to bring them back.
Okay.
To again work with them. Again, you have to be able to make sure you have the cash flow to be able to front it, because there are some businesses that I have, you know, with some of my clients that can't do that, and it's because of the cash flow, because they don't qualify for the loan, which we'll talk about next. And we are going over, and I'm okay to keep going as long as you guys are all okay. Okay, perfect. Yeah, it's 4:20.
Oh.
As long as you guys are okay, I have nothing else booked after this, so I'm keep going.
I thought it was till 5. No? Why did I think it was till 5?
We could put just half an hour at first. I'm thinking, no, I think we're gonna need more than half an hour, but
Thank God there's only the 4 of us.
Exactly. So let's all these personalized, you know, answers, right? So,
yeah.
But yeah, so if your employees were making under $2,000, then you're right, it's not worth it to them. They're going to be better off to stay on, and they might resent you for bringing them back. You don't want that. You want to have better relationships with them. Right. Again, if this extends beyond, and we have to extend the CEWS, I fully expect for them to extend the CERB beyond the 16 weeks. You know, there's no legislation to that, but we know that, you know, that's the one thing that our government is good at stepping up, and we're going to pay, like I say, we'll pay for it all afterwards, but we'll be able to at least make it through with something, whether they extend the CERB or come up with something new. It makes more sense to me that they'll just simply extend the CERB. Okay. Perfect. Any other questions before I move on to the loans then?
No.
Okay. So then there's the loans, which is the CEBA, the Canadian Emergency Business Account. Excuse me. So that is set up through the banks. You need to have payroll. So you have to have, and the purpose was this, is to try to be able to help businesses fund the payroll of the employees you wanted to bring back on the CEWS before the CEWS was approved and available, because the first checks for CERB are expected to be deposited on the 7th of next week on Thursday. So the $40,000 loan was brought out, I think it was almost 2 weeks ago is when the money really started showing up in people's bank accounts. So the qualifications for that originally were that there was $40,000 in payroll paid out. You had to have your T4 summary as the employer to be able to show you that you had the 50,000 or more and under $1 million. They then changed that after the first 2 weeks of that launch to say any company that had more than 20,000 in payroll and up to 1.5 million. So they expanded it because they realized there was a lot of other businesses that really needed help that didn't fit within that. The Cfib, so for those of you who don't know, the Cfib is a Canadian Federation of Independent Businesses. They are pushing very hard to have that $20,000 completely eliminated, and to try to have it open up to sole proprietors, because if you are a sole proprietor, let's say a mom and pop type shop, so 75% of all small businesses in any smaller downtown city or town in all of Canada is a mom and pop type shop, which is a sole proprietor. They've never incorporated, which means they've never actually pulled payroll. If it's them, you know, the spouses or the employee, or their children working, they can't pay on proper payroll, they don't qualify for anything other than the CERB. So the average mom and pop type shop would have made enough to be able to pay their personal expenses and pay their business expenses with probably just a little bit of an additional margin. So what's happening now, they can qualify for the CERB, which will help cover their personal expenses, but there's now nothing covering the business side of things. So there's still a lot of gaps. I'm confident. I mean, I'm talking to the lobbyists and the CFIB. I had a long call with them yesterday. I'm going to be sending out some questionnaires and sending them the questionnaires to take forth to the government, because they can't get me on the calls because I'm not a registered lobbyist, but I can give them information to take forward as to where these gaps are. So I'll definitely send those out. It'll be in SurveyMonkey. If you want to forward it to any small business you know, absolutely, it's better. The more voices, the better, because they promised me they will take all this information to, again, fill these gaps. So what's happened now is, again, payroll of $20,000 to $1.5 million qualifies you for the loan. It's a $40,000 loan. It is a term loan that will be interest-free until December 31st of 2022. If you meet certain qualifications, $10,000 or up to 25% to a max of $10,000 is forgivable. So those qualifications are, it may not be paid back before January the 1st of 2021. So it cannot be paid back at all this calendar year. You can only use it for items such as payroll, rent, utilities, insurance, and regular debt services that cannot be deferred. What that means, and that was several calls to several people and scouring through the bill. So essentially what that means is a regular debt. So it's meant to cover your operational expenses. So if you're a company that you buy and sell products, that's cost of goods sold. It's not meant for that. It's your overhead, your operational. So if you have, you've got software that you have to have, you have to pay your bookkeeper, your accountant, you have something that is a regular monthly recurring service that you cannot defer. So what that means, if you write a check for it, you can defer it because you can pick the date on the check. If it is automatically deducted from your bank account or from your credit card, you can't defer it because you can't pick and choose that date. So anything that is an operating expense that is regularly monthly deducted from your bank account or your credit card would qualify. So as long as you hit the full $40,000 of all of that, then you only have to repay back $30,000 of the $40,000 loan. That has to be repaid by December 31st, 2022. So each of the different banks are setting it up differently. Scotiabank and Royal Bank are setting theirs up more like a line of credit. TD and CIBC are setting that up as a loan, and I'm not sure how BMO is because none of our clients actually work directly with BMO. So I'm not sure where BMO stands. I think BMO is a loan though. So what happens is the $40,000 is deposited into your bank account. Royal Bank, you have to withdraw it. So Scotiabank, it looks like a line of credit. It's called a line of credit, but it's actually a term loan. RBC, it is actually set up as a line of credit on the front end for their technology, but it is still a term loan. So what happens, you can take out, so they don't deposit the full $40,000 in your bank. So you will have to manually or physically go in and transfer it to your main account. Where the key is, if you pay any of it back, a normal line of credit is revolving. You can pay it back and pull it and pay it back and pull it. This is where the term loan comes in. If you pay any portion of it back, you don't have it to pull from again. It's gone. It's just like a normal term loan that you walk into the bank and give them a check and say, here, I want to pay my loan down on this. You can't access those funds again. So it's very important, if you're going to pay any of it back, do not pay it back until you know for a fact you do not need it, and do not pay it back before January 1st, 2021. If you need it beyond December 31st of 2022, it will turn into a term loan. And I do believe most banks are sitting at 5% interest, but the terms will depend on the bank. And, it'll be monthly payments will have to start. Until then, it's interest-free, monthly payment free. So for anybody who thinks, oh, I've got this back, I think I want to pay it back, but I'm not sure, set up a separate savings account. And if you can put $30,000 in that separate savings account, pull it out, pay your payroll, put your payroll back in when you get your CUs, try to do that and try to keep as much of it as you can there, then you won't be hit and surprised when all of a sudden payback time is among us. Because I know amongst almost everybody I know, has gone out, okay, I'll go to Leon's or the Brick. I'll buy some furniture. I'll take the do not pay for 1 year and I'll pay it down every single month. All of a sudden you're like, oh crap, I have to pay it in full now before the interest starts because I forgot about it and didn't do anything. So again, if you can get yourself into a good habit, set up a separate savings account and keep as much as you can and try to be cognizant of that, then you'll be in a better financial position at the end and not into a loan that you don't want to get into. If you truly can't afford that, you have the option of it turning into a loan, which is great. So the only qualification for that, again, is your T4 summary currently, and the government is guaranteeing that. So I have heard that there were a few banks that turned people down. They were challenging it. We think it was a technical because the government is guaranteeing this, and those are the only qualifications. They're not doing credit checks. They're not doing any of that. It is just strictly based on your T4 summary. Okay, and I think that's it for that one. Any questions on that one?
I do have a question for you.
Okay.
Do you know if you can backdate? So say, for example, if somebody applies now and receives the money in May, are they able to use expenses that they had to pay since the COVID-19 started towards that loan?
Okay, so great question. I do not have a definitive answer on that. We have scoured myself and about 4 or 5 other accountants that are spending as much time as myself learning about this. We have scoured the legislative acts. We have scoured each of the contracts of the loans, and we have not seen anything. So what my suggestion is and recommendation to anybody out there and to my clients is, let's start from the day you get the loan in your bank forward. Essentially, like really at the end of the day, they're not going to say this dollar paid this and this dollar paid that. Really, at the end of the day, for the audit purpose, and I just am basically keeping a spreadsheet, an Excel spreadsheet for all of my clients. Once a month after we close their books, I'm going through and I'm pulling out payroll, rent, utilities. I'm pulling all the stuff out and putting all that on there. At the end of the day, as long as there's $40,000, that's it. That's all they, so if you did not have $40,000 between the day the money went into the bank and the end of this year, because you've got all the way to December 31st of 2020 for qualifying expenses. If you did not hit 40,000, then at that point, hopefully by then we'll have a lot more clarity on this, because again, the government's just trying to deal with everything. They're still scrambling. So by then there should be more clarity that yes, maybe backdated charges can be included in that 40,000. So as I'm telling my clients, it's not really supposed to be used to pay your backdated debt. But again, they're not going to say, oh, this dollar was meant for here and this dollar was meant for here. As long as you've got an audit trail of $40,000, that's really it. So again, that's kind of the best answer I can give is, most people should have $40,000 hopefully between now, the day they get it and the end of the year. So I would say apply for it sooner rather than later. If not, you know what, I would challenge that. Like if I had a client that didn't have that, I would still challenge that person. I would challenge that with CRA on their behalf, the CRA audited, and say, listen, you know what, the whole purpose was to help them. COVID started March 15th. So I need between March 15th and the day the deposit went in. I don't know if it would be accepted or not though.
And you have to use the full 40,000 in order to get that 10,000.
Right.
So basically if you use 35,000, then it's based on
25%.
Right.
Yep, it's 25%. So the only way to get the full 40 is, or to get the 10 is use the full 40. Otherwise, it's 25%. Yeah. Okay. Any other questions on that?
I have one. So out of all these 3 programs that you've just discussed,
Yep.
I don't know if I fit in anywhere. So I'm just, because my business is very small.
Okay.
And if I don't get, if I'm not eligible for the CERB, and definitely not going to be eligible for the wage subsidy because they make less than,
They make the 2,000. Yep.
Correct. And then this one here, I mean, I wouldn't even have $40,000 expenses between now and the end of the year.
Okay.
Not without wages and not without rent, if the rent is going to go down.
Well, yeah, you might be able to bring people back. You might still be able to qualify for some of it. So was your payroll 20,000 or more last year?
No.
It wasn't. Okay. So then, yeah, that's the big thing that right now you unfortunately don't even qualify for the loan. But again, So people just like yourself are falling through the cracks. 85% of people that were employed in Canada were employed by small businesses. And when I'm talking small businesses, I'm not talking small businesses, technically, I think 100 employees or less. To me, that is not a small business. That is a medium-sized business. It's not a mega enterprise. But to me, a small business is a mom and pop shop. You might have a couple of people employed.
Mm-hmm.
I'm a small business. I have 3 people employed.
Mm-hmm.
So I just happen to be incorporated, and we make more than that. We're essential. We're still working, which is why I'm lucky enough to qualify for this. But you're right. There is still, I think it's 58% of businesses out there are exactly like yourself that are still falling through the cracks because they don't qualify. And this is my passion, is trying to get into lobby. I fought for 3 weeks to get on a call with the CFIB lobbyist. And they were like, well, you have to be a paying member. Now, personally, my business is a paying member, but the only way they would talk to me is when I put on my other hat, which is the hat for the board member of the Institute of Professional Bookkeepers of Canada. And they said, well, if you guys want to come on as members, and I'm like, well, that's a discussion for a different day. That's not this discussion. So I had to talk fast with them and say, listen, if I send out the survey and I put on the survey that, I'm going to be giving the results to you guys, and you guys are going to be fighting on behalf of the small businesses and the bookkeepers, you guys might end up with a lot more people looking into you and getting membership. So that was the spin I had to take to be able to get them to do this. But that's, so like I plan on I'm hoping, and I think it's very feasible with all of my connections and everybody that I know, that we can pull in easily 10 to 20,000 surveys. And that sounds like a lot of people, but again, I'm connected to thousands of bookkeepers. We've got Facebook groups, and if each of these bookkeepers fills one out, sends them to all of their clients, and their clients send them all to their friends and their business coaches who send to all their clients. I think it's very, very feasible that we can get this, because these are the people just like yourself that are being missed out, that there's nothing to help cover.
Mm-hmm.
And it is so frustrating. 58%. That is a huge percentage of businesses
Mm-hmm.
that qualify for nothing and may or may not be able to open. If you rent from your home, it's not too bad. But if you have commercial rent, that's the next thing we're going to talk about. But if you have a commercial brick and mortar, which I think you said you do have a brick and mortar.
I do.
location.
Yeah.
Exactly. So this may be of some assistance to you. Absolutely. What we're going to talk about next. Mm-hmm. We don't have any definitive details on that yet. I sent an email out today with what we do have. I'm hoping that changes as well. But I'll get into the talk about that momentarily. But you're right. There is just so much that of people that are not being covered, and they're just looking at the big businesses, because the people that lobby for the big businesses like tobacco and airfare and like all of these other big companies and manufacturers, they've got dollars in their pockets to be able to pay to have people lobby. Mm-hmm. The only voice that the small business has are people like me who are a big mouth and try to hound everybody to listen, and CFIB type of thing. They're the only ones. So again, that's why I thought if I can get these surveys into CFIB's hands, they can get them to the government, and they can look at real stats of real people that they're missing, because again, they're not hearing from you guys. So I highly recommend sending into your local and your local member of parliament and your member of provincial parliament. Let them know your situation. Let them know there's nothing out there for you. So, I've sent emails off to like Doug Ford and Trudeau and Minister Ng and Minister Moreau, myself too. So get the emails out, get your voices heard. Like I say, I'll send these emails out. Hopefully Kaylin send them out through Mara, and send them. Hopefully Mara will be able to send them on to you guys. That's the only way to make change, is they have to hear that they're still missing people. I truly believe that everybody will be covered. It's just a matter of time, because they've got this priority list and they're not hearing enough of us yell to realize that there are so many people that are being left out.
Right. Okay.
Okay, so so before I go on, anything else on the loan? Okay, perfect. So the final is which just came out, I just again emailed it today, and that is the commercial emergency rent, or Canadian emergency commercial rent relief, I think. That one's 5 letters, and that one's I just learned that today, so I think that's it. But so what that is, And there's some flaws in this. So first off, there is no process open yet. It was just announced within the last, I think it was about a week and a half ago. It might have even just been the beginning of last week that it was officially announced that yes, all provinces have now come together to an agreement. So essentially what it is it will be 75% of the rent will essentially be paid to the landlord, 25% by the commercial renter, 50% from the government, and then they'll be at a loss for 25% of the rent, which is better than not having any rent collected as far as I'm concerned. And that's a really good way for the, the building owner to be able to give some goodwill back as well. The problem with this is it's actually being run and handled by CMHC, the Canadian Mortgage and Housing Corporation. It will be handled as a loan. The loan will be forgivable to the landlords as long as they can prove and show an agreement with the tenant that they are allowing the tenant to only pay 25%. They will then be able to collect, and I can absolutely include these details for all of these. I'll pull together an email and get them out so you've got the details of all of these. Where this falls short is there is a lot of work for the landlord to do. And what we're hearing is that a lot of the landlords are saying, well, why do I want to do this? If I were the landlord or I were the bookkeeper for the landlord or the building owner, I would absolutely be telling them, listen, if you don't help this business, you are guaranteed it's going to be empty because they're not going to be able to afford to stay. When this is over, new people will not want to go in to brick and mortar locations, first off. Secondly, if they have gone in, if they are looking to go into a brick and mortar foundation, especially if you're in a smaller town or a smaller area, word of mouth spreads very quickly that, hey, they wouldn't help out and this building would. So where do you think somebody is going to go looking for brick and mortar? They're going to want to go to a building that will help out, that helped out and took advantage of this. So the CFIB is fighting to try to change this and have this made so that there is something that the renters can do instead of leaving it all at the discretion of the landlord, because that is a huge, huge gap. And with that, I've also heard that they have to have a mortgage. If they don't have a mortgage on it and they're not registered with CMHC, they don't qualify. So again, you're looking at building owners who might have a smaller mortgage, aren't with CMHC. Again, there's another big gap that a lot of people are being left out. So why should those businesses that happen to be renting from somebody who happens to have been, inherited the building or paid their mortgage off, why should you be in a different situation than somebody who owes a ton on their mortgage? It shouldn't work that way. So CFIB is fighting and lobbying. Again, reach out to your MPs and your MPPs, let them know about this. But what's interesting is applications haven't opened for this yet, and I think it's because they're still doing some back end figuring. I think we have at least another week before they officially open. There is a website that I'll make sure that's sent out again with this all the details, and make sure that that Mara has it to be able to send out. And to anybody who wants it, I'll pull together a link or something on to put on the comments of the video. So if anybody's watching this in future, the information will be there. I am not doing this for business. Anybody who again wants anything of this, contact Mara and Kaylin. They're the hosts of this. I'm just helping because I'm passionate about this. So we'll make sure their contact information is there as well. But yeah, so there's a website that you can sign up, that you can put your email address to be updated whenever there's updates to that. And that just popped up today. So unfortunately, again, I don't have a lot of details on that. I know it's coming. I'm hoping to see a lot of change. But the idea is, again, basically the province will pay 25%, the federal government will pay 25%. So that's the forgivable part of the loan. The landlord covers 25% and the renter covers 25%. So that's kind of the breakdown on how they see it. It's just a matter of how it's accessed. It needs to be easier. It needs to be in the hands of the people who need it and the tenants. I think they need to put a legislative law through, and that they have to open it to all buildings, saying that, they have to do something. So that's my thoughts on that anyway. Okay. Any questions on that one? I might not be able to answer them as best because, again, that's the newest one.
So yeah, I would say that any information that you can forward, that I can forward to my landlord, Because I don't know whether he will be doing the homework. It'll be the tenants that are doing the
And a
homework.
lot of them won't. And that's exactly why I want to get this information out and try to force the landlords to do it.
Mhm.
And, you know, hopefully they will. And I will make sure when I finish writing this, because I've got the information directly from the website, my intent is I'm going to put a little bit of a blurb at the beginning of that. So I'll make sure that's in there as to why would a landlord want to do this? Well, again, for all the reasons I've said, you want to be able to make sure the only way to be able to give yourself the best chance of having continuous rent is to work with the person who's currently there. Because when you're done, you know, if this is over and you have to move out of your brick and mortar location, it's not going to be as easy for them to rent it because, again, a lot of people that don't already have that are going to be gun shy or still trying to recover financially.
Yeah.
And the best chance is to help keep you in it. So, yeah, so I'll be making sure to put that there so that you can forward the whole thing and your landlord will be able to understand why he should do it. Or she.
Yeah. Yeah. Yeah.
Yeah.
And it's supposed to be retroactive April, correct?
April, yes, for April, May, and June rent.
Okay.
Yeah. So whether again that you know they refund you the difference immediately, you know, those details, you know, still are not actually worked out, or whether they'll be left to you or the landlord, because this is still kind of all up in the air. And there's no legislation written around this one right now. It's just here it is. It's like a loan, and that's the same thing with the CEBA, the $40,000 loan. There's actually no legislation around it, which is kind of where it's interesting as to how I can only talk about how I think they're going to audit and what I think is going to be in there based on my, you know, 23 years of dealing with audits. But because it's not actually legislated, it's going to be very difficult to see. They might not even do any audits at all. Who knows? They might leave it because it's not legislated. It's not in the Income Tax Act. I mean, it's, yeah.
I can't even imagine what the end of the year will be like for you, for accountants, and even recording, you know, for small businesses, you know.
Yeah.
It'll be just an Excel spreadsheet nightmare.
Well, I'm doing myself and all the bookkeepers that I work with. So Kaylin is one of them. We actually have spreadsheets that I've pulled everything together, and I'm basically going through, assuming that that every client will be audited. So as I'm working this stuff through, I'm attaching all the source documents. So that way, when they come into audit, because I'm expecting audits, I'm expecting payroll audits, this is going to be the big one. We can just say, boom, here you go. It's done. We've got it all. So that way, the end of the year is not as crazy as it is, because right now we're already crazy as it is. So why not add that few extra seconds and make sure I's are dotted, T's are crossed, and we've got the audit trail done. So, but yeah, it's going to be a nightmare. And then again, the small businesses that aren't using bookkeepers, you know, or accountants or financial advisors to not really know how to wade through this is, yeah.
And that's me.
Yeah.
That's really, I do my own books.
Yeah.
So I'm trying to grasp really, I guess I'll just make sure that all my spreadsheets are pretty clear to understand for everyone.
Yes. Yep, and that's exactly it. The 40,000, make sure if that opens up, you can apply for that. Like if it does open up, you can apply for it. Just again, keep a list of $40,000 worth on a separate spreadsheet, because then that way you don't have to go back and kind of, you know, look through receipts and grab $40,000 worth. If you keep a spreadsheet, it's there.
Yeah.
So.
Yeah.
Yeah.
Okay.
Spreadsheets are a wonderful thing.
Yeah.
Yes. Okay. So no questions on that. I did want to touch base on one thing that I just realized too. Which again, I don't have a lot of information on because they're still putting that out, which is with regards to the additional subsidy, because you know, anybody who's watching this, or you might even know somebody as well too, that would qualify for the increase that they're giving the essential workers. So I know a little bit about that. I've had clients asking me about that. Unfortunately, I don't have all of the answers. I know that Doug Ford did confirm yesterday, it will basically be anybody who is in direct contact with a COVID patient. So, you know, it's covering nursing homes, retirement homes, support workers for that. It's only going to really impact the lower income. My sister, for example, is a nurse, and she says, you know, when I told her about it, I said, it's anybody who's earning $2,500 or less will qualify for this. And she says, well, I work 2 part-time jobs, and she's a registered nurse. She says, my lowest part-time job pays me $2,200 net. So that's no good for me. And I said, well, good. It's not meant for you. It's meant for the people that are maybe making the food in the kitchen, the people that are coming in and changing the bed sheets. They're at just as much risk or exposure, and they're not making much more than minimum wage because they haven't had so many years of schooling. So that we don't have a lot of details. We just know it'll be, $4 an hour. How that is going to be rolled out, I'm not too sure for any of the private sectors, because it's not just government employees. Government employees are easy to roll out, but that is the intent. Again, once there's more information, I can make sure to share it. My website, which, I'll just share that out. Again, I do not want anybody, if you've got questions on this, feel free to contact me. I do not want anybody reaching out to me for business for this. Again, that's Mara and Kaylin, if you've got anything for that. But it's cloudbookkeepingservices.ca, and then I have /COVID-19, or just go to my main site and you can click a COVID. That is, it's updated with all information. So as I get new information, you guys can feel free to check out there. Absolutely. And then I'll make sure that Mara and Kaylin have it. So again, if you guys check there's anything new you guys want to update out yourselves and not have people come to my site, again, that's perfectly fine. Okay. So I think that was it out of the financial aid that we have for now. So was there any other questions? Anything I haven't covered? Anything that you guys might have heard that I haven't talked about?
You certainly answered all my questions. That was great, Tanya. Thank you.
Oh, you're welcome.
Yeah.
And the biggest thing I can say is really, share the information and tell people if they don't qualify for things, contact their MPs and their MPPs. Get out there to the people that will listen. And then again, these surveys, when I get them sent out, get them answered so that we can get them back so that the voices can be heard, and so that, those cracks are filled.
Oh yeah, there was one thing, but my accountant actually clarified this for me, because I finished my books before I applied for Wsib, and then right after sending it to her, she said, "Oh, you didn't have to do this." She said that's when I realized or found out that I didn't actually have to file my taxes before applying for Wsib. So that's, I guess, just
what? No, and that's great to pick up, because again, some of your clients that'll be watching this after, or anybody who'll be watching it, might be in the same situation. So that's right. You do not have to have your taxes filed current to be able to qualify for the Wsib. Where you do have to have your taxes filed is if you have never filed them before. So for example, if you have, you've got a child who has never filed them before, but qualifies, they need to have it done, because you need to be registered with Revenue Canada to be able to, and they have to have your SIN, and they have to have, something on file to be able to do that. So you have to have filed taxes at least once. They will have to be filed. I can see them forcing people, sending out a lot of letters in the spring or even in the fall to kind of say, okay, you know what, these people whose taxes still haven't been filed yet, to make sure that the income was $5,000 last year. So if you don't file, expect some letters to file anytime again between fall and spring to force you to file the backdated ones, but you don't have to rush out and file before you qualify for any of these. The only one that has to be filed for is the loan, which you have to have the T4s filed by for last year, which February 28th was, the deadline. So they should have already been done anyway before this hit. Yeah. Anybody, actually a few extra things to throw out. If anybody has WSIB, you do not have to pay your WSIB premiums now. They are being deferred. Again, they're not being waived, they're being deferred. So they will have to be paid at some point, but they're being deferred until September the 30th with no interest. So again, if you can afford to pay it, because again, you don't want to be hit with, oh crap, I didn't pay it. And maybe I shouldn't have said that word, but whichever, but oh, I didn't pay it. Same thing with your GST, HST. Right now, they have said verbally there's not going to be any penalties for late filing. I have not seen that in writing. So try to get it still filed on time just in case, but you don't have to make those payments. If you can't afford to pay them, they're still asking you to pay them, because that's part of how they're funding the rest of the money going out. But if you can't afford to pay it, again, they're allowing you to defer it until September the 30th, interest-free. Again, it will still all be due, but they're allowing you to defer it. Your personal taxes, the deadline is June the 30th for your filing date. Business taxes, they haven't extended that one, which is still June the 15th, which is really funny that that's 45 days for a sole proprietor or partnership. They haven't extended that one. I think they'll probably, wake up and realize that at some point, but that's still June 15th. But you don't have to make your payments for anything owed until September 30th. So just still file, because again, we don't know what's going to happen at that point with the filing date. So that's the information as of right now. Corporate taxes do not have to be paid right now either, or property taxes if you've got in some municipals, and commercial property taxes. They're saying that those you can defer as well as you can defer your mortgage and credit card payments and some bank loans. I would highly suggest, if you're looking at that, and Kaylin will probably back me up on this, if you're looking at doing that, really look at the details, because if you don't need to do it, it's not really going to save you any money at the end of the day. It'll help you immediately with cash flow, but they're still going to be charging the interest, and they're going to be extending it. So it's not, I think I worked it out on us, and to do the 6 months, it would have cost me about $100 more at the end of my mortgage term. So unless you absolutely need to defer those types of payments for cash flow reasons, avoid them at all costs, because it's not actually going to save you any money. But it is available if you absolutely need to. But again, really look into it and make an educated decision on that. Okay, and I think that's it.
That's great.
Okay, perfect.
Well, thank you very much, Tanya. I appreciate your expertise in getting this information across and helping out. And thank you to Mara for inviting us to come on and be able to help out the unanswered questions for a lot of people that are uncertain whether they can qualify for these programs or not. And I believe Tanya had offered that if there is some future questions that come up after the fact, feel free to reach out to us, and we can definitely get the information back. Mara, I can get my email. Well, you have my email, but we can look at publishing that to have some contact for future questions as new programs come up and what's involved. And we'll be happy to help through to get everybody what they need to be able to survive through all this.
Exactly. Maybe what I'll do, they'll pull together a Google Doc, so that way we can share that out instead of people coming to the website. Maybe we'll just pull together a Google Doc, and we'll have like Mara and Kaylin, both your contact information. If anybody wants to reach me, again, they can kind of go through you Kaylin. So I'll have your guys' contact information there. I'll have everything on there, as well as some FAQs as well for the questions that come in. We'll not only make sure to give answers, but I'll update all of that as well.
Yeah. And what I'll do is I'll have links to your contact information and Kaylin's contact information, as well as the link to the info page on your website about the updates on the government subsidies and all that information that you said that you're updating in real time.
Yep. Yeah, I haven't gone in and updated with the rent assistance yet, because that was just today where I finally found that they had some concrete information on that. But otherwise, everything else is updated in real time, and the links go directly to the government site. So I try to put, here's a little bit in layman's terms, and then here's the link to the source. Because the problem is, if you have a lot of links, and a lot of people do this, and it drives me crazy, the media. I love the media and I hate the media at the same time. I've had so many people contact me and say, well, the media says this and the media says that. Well, you know what? The media is putting their own interpretation to it. They're not trained in this. Their interpretation is very different. So our interpretation, like Kaylin and my interpretation as an accounting professional, is based on the legislation. We understand how to read that language. We understand how to translate that language. Somebody else who doesn't is maybe getting a different interpretation, or so-and-so said this. And of course, you know, Justin Trudeau is coming in and saying a lot, but the one thing that a lot of people don't realize, when he says it, it's not law. So just because he says it doesn't mean it's actually going to be law. Chances are it will turn into law, because I think it's, once he said it, it's kind of political suicide for any other, you know, party to vote against it. But the CERB, that was not how the CERB was initially to come out. When they finally went to Parliament and approved it, there were many changes to it. They were better changes because, again, they were forced into better changes. But just because it said And just because a reporter interprets it one way does not mean that's the truth. Or again, Michelle, like that you heard somebody said to you, oh yes, you would qualify because you lost your income. You know, and that's when you start to get into hearsay, it gets really, really complicated. And who pays for that? It's going to be you. So if you applied, Michelle, and they put the money in your bank account, you think, oh, well, they gave me the money, I must be eligible. Not realizing that they're not going to check until next year.
Yep.
You're the one that's going to get the penalty. You're the one that's going to have to pay it back.
Yeah.
But maybe you would have found different ways to do it otherwise.
Right. Right.
Yeah. So yeah, just make sure that it's accurate information. All of my links are directly to Revenue Canada where it's verified. All right. Well, again, thank you, Kaylin, for this opportunity to be able to share this important information to everybody. Thank you, Mara, so much for, again, this amazing opportunity to be able to share this out, because the more people that know this, the better. Absolutely.
Yeah, and thank you so much for making time. I know you are super busy at this time, and it's really great to meet you virtually. And thank you, Kaylin, for bringing in your mentor. I can see why she's your mentor.
100%.
Yeah, hopefully you got some information to Michelle. Like I said, I'll send you their information. I believe you should have gotten an email from Tanya, so you should be connected to her if you have questions. And anyone else who's watching, like I said, I'll have a link. So if you have any other question, anyone else that's watching, feel free to reach out to Kaylin, reach out to Tanya for any questions. So hopefully you found value, and thank you so much to everyone that's here right now. So more power to everyone. I know these are very challenging times, but we will all get through this together.
Absolutely.
For sure. For sure.
All right. Okay.
Thank you, ladies. It was great.
Yes,
Thank you. Much love to everybody.
Thank you.
Right. Have a
Same
good
to
day.
you.
Okay. Thanks, everybody. Take care.
You
Bye
too.
now.
Thanks.
Bye.
Bye-bye.
Bye.